going to preside today. I'd like to introduce Ann Wieskamp, who is also on the committee and board, and Elizabeth Eccles, who is our other board member. Are you here, Elizabeth?
Yes, I'm here.
Oh, there you are. Okay, good. All right, so pursuant to Governor Newsom's executive order number 2920 and the Alameda County Health Officer's current shelter in place order effective last May, the Regional Park District will be open to the headquarters will not be open to the public, and our finance committee meeting will be participating via video conferencing. We did not receive any public comments in advance, which we made available. But if someone is interested in a public comment on any of the items, they need to contact Caitlin Stone as we run through the meeting. And the way to contact her is to email her at cstone@ebparks.org. So if you have any questions utilizing the video stream, you can also call her at 510-544-2400. Thank you for feeling all of this, Caitlin.
Of course, happy to.
So we have several items on the agenda, and how do we want to work introducing staff who is here today?
Caitlin, would you like to do just introduce the staff members here?
Sure, I'm happy to. Just to, out of respect for time, I'll just introduce a few staff members since we do have quite a lot of attendees, which is wonderful. We always welcome everyone to Finance Committee. Of course, we have our AGM, Deborah Ocker. I also saw AGM Anthony Chaburo come in, and AGM Jim O'Connor. There we go, thank you. And we have Carol Victor as well. Hello, Carol, thank you for joining. Let's see, Allison Cook from Human Resources. Welcome, Allison. And of course, from Finance, we have Deborah Spalding and Michelle Strawson O'Hara presenting, and many other finance staff. Thank you all for coming. And it looks like, I don't want to miss anyone.
Thank you, Caitlin. I think we will be joined by Dr. Anna Alvarez, our Deputy General Manager, and Sabrina Landreth, our General Manager, during the meeting.
Perfect, thank you.
Thank you.
All right, so Caitlin, would you like to formally call the roll?
I am happy to, thank you. So we will first start with our wonderful alternate, Director Wieskamp.
Hi, glad to be here.
Hi, welcome. Director Eccles.
Present.
Thank you. And finally, our Chair, Director Lane.
I'm here.
Welcome.
Thank you very much. Okay, so we'll start with the first item on the agenda, which is our 2020 Comprehensive Annual Financial Report.
Thank you, Director Lane. Michelle Strawson O'Hara, our Assistant Finance Officer, is going to start this presentation. Go ahead, Michelle.
Good afternoon. I'm Michelle Strawson O'Hara, Assistant Finance Officer. Can everyone see my screen okay? Great. Today, we are pleased to present our 2020 Comprehensive Annual Financial Report. I'd like to start off by recognizing the team that contributed to preparing this document, in particular, Accounting Manager Kim Belingett, who worked very closely with the auditors and had a significant role in putting this together over the past several months. Also, our Audit Manager, David Sumner, who prepared the statistical section, and Confidential Secretary Connie Swisher, who handled document management and putting together the final published document. Plus, there were many other staff throughout the district who contributed to the timely completion of the report. After my presentation, we have Audit Partner Rosalba Flores and Audit Manager Colin Lowe from Brown Armstrong Accountancy Corporation presenting today and addressing any questions you may have. In addition to our presentation today, we'll be presenting this report to the Park Advisory Committee next Monday, and then we'll be bringing this to the full board on July 6th for acceptance. We also had our annual exit conference with the audit team and the general manager to discuss the overall audit process and outcomes on June 8th. As a reminder of the district's audit cycle, the interim audit kicked off in January with auditors from Brown Armstrong conducting interviews and preliminary testing and reviewing internal controls and compliance. Then at the end of April, they conducted their final fieldwork testing, which was again done remotely for the second consecutive year. The testing and financial report preparation continued through mid-June when we were able to finalize the financial reports. First off, we'd like to walk through the financial report and the PowerPoint and highlight what we believe are some key points. The report is broken down into 3 sections: the introductory, financial, and statistical sections. The introductory section includes the transmittal letter and the financial reporting award from the Government Finance Officers Association. The district has received this award for the past 20 consecutive years and will again submit the award application for the 2020 report. After the introductory section, the financial section starts with the independent auditor's report, which includes a clean or unmodified audit opinion, then follows with the management's discussion analysis, which is a useful narrative of the numbers. Then the basic financial statements, notes to basic financial statements, the required supplementary and supplementary information section, and lastly, the statistical section. The first financial statement is the statement of net position, which can be found on page 34 of the report. And this is the government-wide picture, which is adjusted for full accrual, which means it takes a broader or longer term view of the financials. The government-wide financials include capital assets and long-term liabilities such as pension liabilities, which are not included in the governmental fund financial statements which follow. After the fund financials are the proprietary funds, which account for the district's internal service funds, including workers' compensation, major infrastructure renovation and replacement, major equipment replacement, general liability insurance, and employee benefits. Next are the fiduciary funds financial statements, which account for the district's pension plans held in trust, and then the notes to financial statements, which provide important details to the financial statements. Following the notes are the required supplementary and supplementary information sections and include budgetary information, pension and retiree medical funding, as well as additional details on non-major governmental funds. And last is the statistical section, which provides interesting trends and a comparison of data over the past 10 years. So this slide shows the increase in net position to approximately $885 million, which is primarily made up of net investment in capital assets, as the district continues to invest in land acquisitions and development. You can see how the increases in investment in assets, the blue line, is relatively consistent with total net position, the green line. This next slide is a summary of the governmental funds balance sheet, which is on page 34 to 35 of the report. The governmental funds include the general fund, the debt service fund, project fund, and other non-major funds. The district's governmental funds had a combined fund balance of $283 million, which was a reduction of just over $20 million from 2019, primarily due to the spending down of capital bond proceeds for projects. Governmental accounting classifies these funds in a hierarchy, breaking down the fund balance into what's available to spend and what is not. At the top are non-spendable balances such as inventory and prepaid expenses. The next section is restricted by external parties, legal requirements, or contracts. And committed balances are where the board has passed a resolution to set aside money for special circumstances, and these funds can only be used in compliance with that resolution. Assigned are funds set aside for a specific purpose, such as election costs and legal contingencies, and unassigned is what's left over for future spending. This next slide is a summary of the governmental funds statement of revenue, expenditures, and changes in fund balance, which can be found on page 38 to 39. The most significant changes from 2019 were a decrease in charges for services revenues due to the reduction in summer programming in 2020, and increases in ASD's expenses due to the completion of several projects last year. Next, we'll drill down on the details of the general fund. So this shows the original approved budget, the final budget, and actual amounts for 2020. The final budget includes adjustments during the year for appropriations and transfers from mid-year budget review. For example, to fund projects, internal service funds, and pay down unfunded liabilities. In the actual column, the net change in fund balance was $9.5 million for the year, which was attributed to higher than projected property tax revenues, as well as personnel and operating expenditures below budget. Our next couple of slides look at our pension and retiree medical plans. The district's OPEB and pension liabilities, including CalPERS and the district plan, amount to $137.8 million at December 31st, 2020, which is an increase of $900,000 over the prior year. To help mitigate the district's growing retiree obligation, the district established an irrevocable Section 115 pension trust in 2017 and has set aside a total of $9.3 million for funding anticipated increased costs of the CalPERS miscellaneous plan. When we look at pension funding progress, the district is funded at a range of 72% for the CalPERS miscellaneous plan to approximately 100% for the district's general employees retirement plan. Overall, these are considered well-funded in comparison with other agencies. However, the rates will fluctuate based not only on our contributions, but also changes in the investment returns and pension assumptions. In addition to the comprehensive annual financial report, staff is requesting recommendation from the committee to bring the auditor's communication with those charged with governance, the 2021 appropriations or GAN limit letter, and the single audit report to the board for acceptance. So that concludes my presentation. Before I invite Rosalba Flores from Brown Armstrong to speak, does anyone have any questions for me?
Okay, are there, Jill? Not hearing them. Please proceed.
Okay. Thank you.
Good afternoon. Can everyone see the materials?
Not yet. Hold
not
on.
yet.
Go ahead and do your screen share one more time.
Okay. Let's try again.
Okay,
Can you see the materials now?
we can. You want to go ahead and put it in full screen mode? You just click up at the top there. Oops. Yeah, that little icon up at the top.
Give me a sec. There we go.
Nope, got your email again.
Really? Okay. It worked a second ago. It says sharing screen.
We can see your screen. Up at the very top, there's a few icons that have little pictures of a document. And just click on one of those at the top in that ribbon. Not that one. No, not that one. The next column down. Yeah, try. Oh, shoot. Well, I think the format that you have it in, we can see.
Let me try one more thing. Colin, do you happen to have it up in case you're able to pull it up?
Yeah, I can do it. Give me.
Okay. Yeah, it's odd that it was working right now.
If it's helpful, I've got it up on my screen as well.
We'll do that, Michelle, if Colin's not able to. Okay. Thank you, Colin. Okay, we're ready. Thank you. Good afternoon. So Colin and I will be presenting the December 31, 2020 year-end audit results, and we're very happy to be able to present the results. I am the engagement partner responsible for all accounting and auditing services to your district, and Colin Lowe, the audit manager. Again, he's going to be presenting with me, and feel free to ask us any questions as we go through the presentation. Michelle did a great job at covering the report, so we're gonna provide you some additional information, but Michelle did a fantastic job in going over the audit report. So this is just a quick agenda that we put together. I'm gonna kick it off just going over the scope of services. Next slide, please, Colin. And then after I go over the scope of services, then I'm going to be turning it over to Colin. He's going to go over the timeline, and then I'll go over the audit reports, and then we'll end it with the financial statement review. So really quick on the scope of services, I like to go over the scope of services because this pretty much details our audit responsibilities as part of our engagement. This is pretty much the reason why you engaged us. And so we just like to go over that. As Michelle also mentioned, we had some preliminary meetings with both your audit committee and management to go over our proposed plan. And so I didn't want to be repetitive of that information, but again, it was important to go over the scope of services and the reason why you engaged us. So as we're conducting our audit, we follow not only the AICPA issued standards, but we're also following other standards that we're required to follow, including the Yellow Book. And that one deals a lot with internal controls, and I'm going to be going over the results of these reports. But I just wanted to mention that the main purpose of why we were hired was to perform a financial statement audit. And then also, because you receive a significant amount of federal funds, we are actually also required to perform a separate audit, a compliance audit over your federal grants. And so we're basically required to make sure that you did comply with those requirements. And so I'll be going over those here momentarily. But this is kind of like the overall of our scope of services and the reason why you engaged us. We are also required to issue a SAS 114 report, which is the required communication report. And this is basically, again, just because as we're conducting our audit, we're not necessarily communicating with you. We're mostly communicating with your management as we're conducting our audit. So I'll be going over that report momentarily in more detail as well. And I'm just going to turn it over to Colin. He's going to go over the audit timeline.
Hi, everybody. So this audit timeline was briefly discussed by Michelle earlier. I'll just mention that we performed our interim fieldwork on the week of January 25th and our final fieldwork on the week of April 26th. This was similar to our audit last year. And then after each week of fieldwork, we also held meetings with management just to address any questions or concerns that we may have had. And then we periodically had presentations with the finance committee as well. And then throughout May and June, we reviewed the comprehensive annual financial report just to make sure it was all good. And then we ultimately issued our report on June 11th. Our timeline was pretty similar to last year. There were no delays, even though all the work was performed remotely this year. So that was good. And with that, I'll hand it back over to Ms. Alva.
Thank you, Colin. And then I just wanted, before I go over the results of the audit, I just wanted to note that we had a very successful audit once again. And as Michelle mentioned, we did perform our audit remotely. Actually, this year was a full remote audit because last year we actually performed our interim procedures on site. And then because of the pandemic, we performed year-end remotely. So this year was an entirely complete audit from beginning to end remotely, and everything went really well. Your staff is highly organized. Everything was provided to us in a timely manner. And so what that resulted was that we were actually ahead of schedule. And so we were actually able to provide our opinions ahead of schedule. So I just wanted to note that. We talked about the required communication. Again, this is a letter that is required by professional standards, because as we're conducting our audit, we don't communicate with you. So this provides you with important information on significant matters as they relate to the audit. So one of the items that we are required to report to you is on any new GASB pronouncements. As you know, there was a new GASB that was issued in response to the pandemic, GASB statement number 95. And what that did was delay the implementation of several standards by allowing one additional year. And so even though the district actually implemented quite a few standards early, regardless last year, but so there really wasn't any new GASBs implemented this year. There was one that we actually are noting on here, but it really didn't have an impact because it was not really applicable to the district. And then as we're performing our audit, we're also taking a look at your significant estimates. These are really important for us to get an understanding, because estimates are that, they're derived from assumptions that are made by management. And so we are required to review these estimates to make sure that we understand them and that we are comfortable and understand how these estimates were derived. So these are some of the ones that we reviewed in detail. The risk management liabilities have significant estimation, as well as the other post-employment liabilities and the net pension liabilities related to your pension and other post-employment benefits that you offer to your employees. And then also investments also carry quite a bit of estimation. And so we review those as well. And then a couple other things in regards to this letter that I wanted to know. As we're conducting our audit, sometimes we may identify the need for an accounting correction, an adjustment that we may propose to your management. And so this year we did not have any proposed audit adjustments. And so I'm happy to report that there were no corrections that were proposed by the audit team to management. So congratulations on that. And then just the last item before I go over to the next slide is, sometimes as we're conducting our audit, we may have, a disagreement as to an accounting treatment, the implementation of a new accounting pronouncements. We did not have any disagreements with management. We had pretty good communication, and we worked really well together, as well as our staff. So I just wanted to note that. Any questions on this report before I go on to the next one?
Well, I just want to say I'm glad to hear it went as smoothly as it did, and probably helped to reflect what you had done on the year before, I'm sure. So thank you.
Absolutely, thank you. And then just getting back to the audit opinions, the first report, Michelle mentioned it's included in your comprehensive annual financial report. And this is the main opinion on the financial statements. We did provide a clean opinion. And again, all this states is that all the information that we were provided with, that we reviewed, we were satisfied with the information provided. And so we have issued a clean opinion. So congratulations on that as well. And then I also talked about when I was referring to our scope of services that we are looking at your internal controls as we're conducting our audit, making sure that you are complying with your laws and regulations. And also we are required to report to you if we find any material weaknesses or significant deficiencies that we identify as we're conducting our procedures. And keep in mind that, although we've already documented fairly well your internal controls in our working papers, this is an exercise that we do on an annual basis, because every year you can have significant changes. You can have staff departures, new policies that are implemented. So this is an important part of our audit process, making sure that we're doing these walkthroughs on an annual basis, refreshing our understanding, and then making sure that there are no issues with internal controls as we're conducting our audit. Any questions on that report? Okay, and then the next report, the report on the compliance with each of the major federal programs, I also talked about it. You've received a significant amount of federal monies, and these are being spent on programs for what they're intended for. But as part of the audit, we are required to review your compliance with these requirements, making sure that these funds are being utilized for their intended purpose. And so we are required to select a sample of the expenditures and making sure that they are being spent in accordance with the grant agreement, and also making sure that you're complying with any of the requirements of the grant. So the result of our test disclosed that you were complying with all these requirements. In our single audit report, we are required to provide you an opinion on the programs that we tested. It should be the programs that are considered major. We did test 2 programs that were considered major, and the result of that was that you complied with all the requirements. So we didn't have anything to report, and this is also a clean opinion. Any questions on that one? So that kind of wraps up the reports that we issued. I know Michelle also mentioned the GAN limit. That's just an agreed upon procedure. And we're basically going through the process of making sure that you're following the guidelines in accordance with the GAN limit. So that one, we didn't have any comments on that one. We issued that report as well. And now I'm gonna turn it over to Colin. He's gonna go over the financial statement review process.
So after management provides us with a draft of the comprehensive annual financial report in May, we send that report through multiple levels of review within our firm. The first team it goes to is our administrative team, and they kind of go through the report and look for grammar, spelling, consistency throughout the report. And then we also send it through our engagement team. So we'll usually find a staff who will make sure all the schedules foot properly. And then me and Rosalva, we will review the report, just to make sure everything looks accurate, all requirements are met, things like that. And once it goes back and forth between us and the finance department, it goes through a final review through another partner. That's not associated with engagement. They'll do a quality control review just to get us an extra set of eyes, and just make sure that everything is in compliance. And then after that, we'll just submit the report. And then for the single audit, we have submitted that through the Federal Audit Clearinghouse. It has been accepted by them as well. And then while reviewing the annual report, we use multiple internal checklists and the GFOA checklist just to make sure that all requirements are being met and that you guys are eligible for the GFOA award again.
Thank you, Colin. And I just wanted to mention also that, every year we look at any comments that the GFOA provides on the previously submitted report. And, it's always just a very short list. I think this year for the 2019 financial report. I think there were maybe just a couple of comments, very minor. So that really is a testament of the hard work that your staff puts in producing a really good quality report. And then also, whenever we get a draft, it's always very clean, very easy to review, nothing major. We do go through a very thorough review, as Colin mentioned, because we want to do, our due diligence in providing you with feedback and our recommendations. But overall, it's a very good product produced. And so I just want to commend your staff and then also thank them for all the help throughout the audit. Again, it, was again challenging in a remote environment to provide information, and they're always so organized and well prepared to communicate to us any significant items or questions they have. And so again, the reason why we're able to present to you on our date schedule is because of the tremendous help and support that we receive from your staff. So I just wanted to take the time to thank your entire staff for their help throughout the audit.
Okay, thank you for that.
And so that kind of concludes our presentation. We just kind of wanted to turn it over to you. If you had any questions for us, we'd be happy to answer any questions you may have for us.
All right, Elizabeth.
Actually, Deborah has her hand up. I know.
That's Deborah.
Oh, no, you go ahead, Director Eccles, you go first.
Well, I'm just very pleased by the audit, both by having a nice clean audit again, and also that you're able to get it done so efficiently and early in spite of the pandemic. And so really my thanks both to our auditors and the team for being able to work efficiently, and obviously I'm pleased with the results. So thank you.
Okay, thank you for that, Deborah.
I just wanted to thank Resolva. The firm is so, professional, so technically up to, all the requirements. They're very helpful to us. I also want to thank Kim Belingit. This is definitely her project. And I think all of you received a copy of the full annual financial report. I was going to hold it up, but I don't have it right in front of me. But you all received that hard copy. And I also wanted to make sure you knew what was in your packet. So Resolva just went over the letters that are included in your packet. But I just wanted to make sure you knew that on page 18 and 19, that's the communication with the governing board that I like to highlight. No difficulties with management, no misstatements, all the things that she covered. And then the next letter is the GAN limit letter. But more importantly, I love to point out the grant report. So on page 33 and 34 of the single audit report, which is really just the federal grants that we receive, and it's only the expenditures of that calendar year. And that was a total of, $3.3 million. The prior year was $2.3 million, so we're pretty consistent, and it lists out those major programs. The single audit is really testing compliance that all the entire district is bound to, and the fact that we have no findings and no misstatements there makes me really proud. The entire organization, the grants team, and all the project managers in design and construction work really hard to expend grant funds, and we meet all the compliance requirements. So that's all I wanted to point out. Thank you.
Okay, thank you. That's really good to know. And it's good to get one clean report after another on each of the aspects, and also with a good possibility that we'll receive the award again this year. So, any other questions? Yes, I am. Mm-hmm.
It's a pleasure to be here. And as I always expect, meticulous. And what do I get? Meticulous. Everybody all the way along. So thank you so much for doing such a great job for the district. Everybody in finance. It's an impressive record. And you always rise to everybody's expectations. So thanks again.
All right. So is there anything else anyone would like to add? Is Kim here? Would she like to add something? I don't see her.
Sure. This is Kim Blingett.
Yeah.
Hi, everyone can see me?
Yep.
Yeah, I do want to extend my thank you to Brown and Armstrong. They really did look through the financials in depth, and even on the final hour, we reviewed some last minute confirmations, and we're very pleased that they go through those efforts. So thank you to them, and it's been a pleasure always working with you guys. So we hope to see you again next year, and it goes well also. So thank you. And this is hello from Jacksonville, Texas.
Oh my, well, it might even be hotter there.
Yes. Very
Well,
humid.
thank you, Kim. We definitely feel the same working with you and the rest of the team, and hope you enjoy your vacation.
I will. Thank you so much.
Very well deserved.
Well, we may be seeing each other in person next year, but I think we'll be doing things somewhat differently. So there will be remote and in person at the same time, I would suspect. We're doing some innovative things that haven't been the case in past years. So for this, we need a recommendation to the board. And I would ask that someone move the recommendation and second, and we'll have a vote.
Or I'd be happy to move the recommendation to the full board.
I'm happy to second the motion.
All right, Caitlin, would you take the roll, please?
Me too. We will start with Director Wieskamp.
Aye.
Thank you. Director Eccles.
Aye.
Thank you also. And finally, Chair Lane.
Aye.
Thank you all.
All right, thank you very much.
Are we allowed to applaud all those hard workers?
Oh, we can.
Thank you so much on all sides.
Yes. Thanks again.
Thank
All
you.
right. And so we will move to our next item, which is our other, I love the titles that we give to these things, but our other post-employment benefits trust fund updates and investment performance through May 31st of 2021.
All right, good afternoon, everyone. I'm Deborah,
Deborah?
Assistant Finance Officer. Can you guys see my screen all right?
Yes.
Yes.
Okay, all right, great. So yes, as Director Lane said, this is our OPEB trust fund update. So OPEB is other post-employment benefits. It's basically the medical benefits that we provide for our retirees. And I'm going to do a very brief overview, and then I'm going to turn it over to Matt Goss, who's here from CERBT, and they're the administrator for our OPEB trust. So just a bit of history on our OPEB trust. It's a separate fund, a trust fund that was established by the district back in 2007. And the sole purpose of this fund is to take care of retiree medical costs, which are a little over $2 million per year. So the idea is that you pre-fund the trust, putting money in early so that the investment earnings grow over time, and then you're not having to fund it every year because your investment earnings are covering those costs, or at least a portion of those costs. So we established the trust in 2007. In 2012, we contracted with CERBT, which is the California Employers Retiree Benefit Trust Fund, to manage that trust, to manage it and invest it. They have 3 different investment strategies that they offer. And I believe Matt will be speaking more about this. We are using strategy 1, which has the highest expected return. It also has the highest expected risk, but because we started pretty early, we've been pre-funding it well, we felt that that was the right selection to make. and it has done very well for us, which Matt will walk you through it. And just a brief preview. So since the time that we've been with CERBT through May 31st, and I believe Matt has information that goes even further along, we've earned $37.8 million in investment earnings. So that's been a real boon for funding those retiree medical costs. And so that's all I have. I'm going to stop sharing my screen and I'm going to turn it over to Matt.
Okay, welcome, Matt.
Thank you. I appreciate it. Thank you, Deb. It's been fun working with you and your team and getting this going here. And it's nice to be back working with all of you. Can everybody see my screen now? And can you also hear me okay?
Yes.
Yep.
Fine.
All right, excellent. So as I move through here, what I do sometimes is I'll use boldface type to kind of direct your eyes to, the more important topics on a slide that has a lot of information. The point of the slide having a lot of information is in case there are questions about the actual benefit promises and the liabilities that they create. And that really is the bottom line. The reason that we all have come to know one another is because you offer these benefits and they create measured liabilities that have to be reported on your financial statements. And that was talked about in the previous topic on the agenda today. But you can see that that's a growing number. In 2017, the liability calculation was almost $68 million. And if you fast forward it 2 years to 2019, it was up to $70.7 million. And that's because active employees who are coming to work each day that could potentially be eligible for these benefits are accruing costs in the form of liabilities for you. And so it's a growing liability. And hopefully what you do is you create a growing pool of assets to outpace those liabilities. And that's how you would achieve what Deb referred to earlier, which is that investment income will pay a large portion by increasing percentage from 0 to 100 of your total costs. Probably never paying all of them. You'll have to have some principal feeding that normal cost growth of liability to attack, but nonetheless, you're doing great. So there's an annual amount that the actuaries recommend that you invest to keep pace with the growing liabilities. And if you do that, and you can see that it's about 3.8 million and change, then you will not only catch up for the past lack of funding this benefit, which was pretty much the norm until 2007 or so for every employer up and down the state of California. And you will also be able to keep up with the growing costs. So you'll get to 100% funded and you'll stay there. Now, your actuary is only one piece of the equation. One of the things that you can voluntarily do is what you have done with us, which is to create a trust fund, to build a pool of assets, and to earn a rate of return that's higher than using something like Lafer County Treasury and take advantage of the time-weighted value of money. So you've really done well doing that. You can see through December 31 of 2020, you had earned more than 32 million in investment income, and the entire amount of money that it cost you, not just the amount of money that you paid to the CalPERS CERBT program, but also to external investment advisors, internal investment managers, custodial services, online record keeping, et cetera, et cetera. My salary, this little laptop computer I'm on, was just over $355,000. And that was a period of over 8.3 years, going back to the 14th of September in 2012, when you transferred your $23 million in assets that you had in your prior OPEB trust administrator's account. So you've done well. You've earned over 8% annualized net rate of return, 8.37% through that date. And if we fast forward to May 31, which was, as Deb pointed out, the date of measurement, the as of date of measurement for this performance, you have a little bit more, almost $38 million in investment income, over 83 million total in your account with us, and a rate of return of 8.94%. And things have continued to improve between May 31 and today. So as of June 10th, which was kind of the cutoff date for me getting this information to Deb so she could get it in this packet, you're up to 9.12%. And most of this is just from investment income generation because it's a good time to be in the global equity market with respect to public market securities. And there's a pretty good allocation of that here. About 59% of your assets are in that specific asset classification. So you're doing really well. Just to give you an idea of how well, if you were in Layford County Treasury during the last, let's say 13, 14 years, you probably would have earned around 1%, maybe a little bit more, maybe a little bit less, just kind of depends on the cash flow and the dollar amounts of your transactions into that vehicle. But this is a lot better. And your actuary assumed a rate of return long-term in the most recent report of 6.5%. So you're outpacing both of those with great statistical significance, which means that you're more likely to get to 100% funded sooner and stay there. Said in another way, you've experienced actuarial gains that you would not have otherwise if you just had a 7% or a 6.5% return for the period measured. Now, this slide here is a more specific breakdown, a more granular look at how you did this using budget cycles as the rows. And I don't want to get too into it, but what I wanted to point out to all of you with respect to future expectations is the far right-hand column, which is a cumulative net rate of return kind of tracker. So as you go down that column row by row, you can see that you started off with us in a really good year. So it was a good time to send a large lump sum of money like the $23 million that you sent, and you earned 18.53%. And then we annualized that with the first few months in 12-13 when you came in, about 9 months actually, I believe it was. And you can see you were at 12.44. But over time, what happens is that you revert to some sort of mean. And that mean is driven by the asset allocation strategy, which targets probably something around near 7% long term. And that's probably what you can expect to achieve in this investment vehicle moving forward. We do look at capital market assumptions often, and we will revise our asset allocation strategies to reflect those updated capital market assumptions so that we're constantly optimizing the investment for its risk reward relationship and in potential to be the best tool for the district. But where you are now is great. Now, I wanted to point out something else I did on this slide because I don't think I've spoken to you since the coronavirus, but maybe we talked briefly just after the coronavirus. But a lot of people ask me, how bad did things get for us during that period? So in the bottom 5 rows of this table, you can see it says as of 2/19/20, you were at 7.75% earned over the period inception to date. You had $68 million. A month later, on the 23rd of March, 2020, you were at the very bottom. This is when the coronavirus had impacted markets and you lost a lot of money. You can see you lost, around, let's just say 16 to $17 million. And you were down to 2.68%. But this is really a testament to the power of unit values over time. This particular investment over time is mathematically probable to do extremely well and consistent with that mean reversion that I talked about a moment ago. By the end of last fiscal year at June 30, 20, you were back up to 64 million and change at 6.39%. Fast forward all the way to the 10th of July or June, of 2021. And you're at 9.12%. And you really did that by just staying the course, recognizing the fact that this is a long-term investment, that you have long-term goals that are much more important to you than your short-term concerns with respect to this money. You didn't really need liquidity, so you just let it ride. And those unit values not only came back into the black, but they actually went higher north than they had ever been prior. So that was a great move by your team. Sometimes the best thing to do is nothing. And they had the patience and the wisdom to do that. This is a funded status evolution table. So your goal, I think, like most employers, and I've been told by your staff, is to get to 100% funded or so and stay there. And you can see that you're on your way to doing that, despite the fact that your liability continues to grow, as we talked about a moment ago. So do your assets. And the rate at which your assets are growing is actually steadily outpacing the rate at which your liabilities are growing. So this is a formula for arriving at a 100% funded status and staying there. So you might be asking yourself, well, are we going to have to still make the same annual financial commitment once we get there? And the answer is no. It will reduce because that annual commitment is combined of two factors. One is the normal cost, that ongoing growth of liabilities tied to the benefit promise made to active employees. And the other is the unfunded portion of your overall liability for past lack of funding. So once that is taken care of, when you're at 100% funded, there is no more unfunded liability. So you only have those normal costs. So the price tag on your ability to stay fully funded will be less. That means you can free up some cash to do other things with that might be of interest to you. One example would be attacking some of that pension debt that was described in the prior presentation. So our portfolios, and Deb alluded to this, so this is the point at which we'll describe those. They have expected rates of return over a 60-year period is what we're looking at. So it's a really long period of time. And then they have corresponding levels of risk that are measured by a standard deviation of expected returns. So for your investment vehicle that you're in today with us, you can see that irrespective of cash flows, just an arbitrary amount of money going in on day one, staying in for 60 years untouched, you could expect to achieve about a 7.59% return. Now, in reality, usually that will be lower because you're going to flow money in and then flow money out during that 60-year period. You're not going to be fully saturated with the total balance that you would, have at its peak for the entire 60-year period. So your return will be a little bit less, more like 7%. That's why I said that earlier. But the level of risk exposure is always about the same in its theory, in its projection. In fact, you've actually had a lower level of actual risk exposure than the number here on the slide. The main point of this slide is that if in the future staff decides to recommend changing strategies to something that is more aligned with capital preservation as opposed to growth, you have that option. It's free of charge. We could move your money for you at your discretion when you're ready to do that. So you don't have to take it to another firm, to another option. You could keep it with us and invest it in a different way that meets your evolving needs. When you're ready to discuss that, I'm here for you. This is my job, is to serve you. You can see how we invest the money. It's pretty simple and uncomplicated. This is similar to how I invest for my children's college, should they be like their mother and smarter than their father and get into a good one that costs a lot of money. We have a broadly diversified portfolio that includes stocks and bonds and other things that protect against inflation-related investment risks, such as tips and commodities. And while they don't make up a lot of the portfolio, they're there for those moments when you need them. And this is a pretty common approach. And you can see the level of participation as measured by a percent 0 to 100 for each of ththose major asset classes. Now, this is much different than the CalPERS pension fund. I just want to show you that for a second. So I'm going to hop over to something just real quick and show it to you. So in the CalPERS pension fund, I'll blow this up a little bit. In this table up top, you can see that they're in things like public equities. They're in real estate. They're in different things that we're in. But they have private equity. They have real assets. They have a lot of other things that we do not have. So our investment tool here is actually not the same as the CalPERS pension systems, PERF, the Public Employees Retirement Fund, as they call it. It's a lot simpler, less complicated, and more straightforward. So, I think that's interesting to know for you at this point, and I wanted to share that with you. You can see if you were to change to a more conservative strategy at some point in the future, you would be using the same underlying asset classes. It would just be the level of exposure to equity, which would go down. The level of exposure to fixed income would go up. You'd therefore be invested more conservatively. And that's what you'd likely expect is a lower rate of return, but for a corresponding lower level of risk exposure. This slide here is really about our trust fund and hitting our benchmarks. Your report card I already shared with you, it's over 9%. You're doing fantastic. You really deserve the credit for that because you flowed the money in consistently over time. And it was because of your ability to, consistently do that, that you have the return performance that you have. We just kept doing the same thing. And you can see that here. We invested in alignment with benchmarks using a passive approach. And the benchmarks, just if you're curious, are based on each asset class being used. You can see them in column number 2 here on this slide. But when you aggregate them, you just get a composite benchmark. And you can see here that for your strategy and all strategies, we've outperformed that benchmark over different time periods. If you're looking at real short-term time periods like a month or a 10-year period, we're doing that. So you know what you're getting with us. You have confidence that it's reasonably safe to assume that in the future we will continue to do that. Now, the downside is that when the benchmarks are negative numbers, we will do that too. We are exposed to the market, and the market is not always a good place to be. But over the long term, mathematically, it is overwhelmingly probable that it is one of the best places for you to be. So we think that this is a sign that our investment policy is actually unfolding as we would have hoped strategically it to unfold. And we can probably look at this data and say, there's a lot of support here for the fact that we're doing our end of the bargain that we promised we would when we signed the contract with you. Now, the total cost that we've been charging you for a very long time, about 7 years, I'll show you the historical breakdown of that in a minute, but it's only 10/100ths of a single percent. So for every $1 million you invest with us each year, we charge you $1,000. And that's really inexpensive. It's low. It's a lot lower than I pay for any of my personal investments for the kids or for my retirement, my wife, and for her retirement and all of that stuff. So, this is a great deal. That's because we're not for profit. It's a self-funded trust fund. There's over $15.5 billion in it, and the bills don't go up as fast as the amount of money in the trust goes up. So, this has gotten really cheap. We're basically at the saturation point of low cost. The fixed cost floor, based on my analysis, and these things move a little bit, it's probably around 7 or 8 basis points. So we're not charging you much at all beyond that. So I feel like we're at a point where we can probably sustain that and retain that for a long period of time. And if we were to go up 1 or 2 or go down 1 or 2, it's not going to make a whole lot of difference. And we would do that simply based on the need to do it. We can't be in a position to over collect, nor can we be in a position to under collect because we're not structured in a way that would allow us to do that without consequences to our compliance. So that's good news for you. Wrapping this up and opening it up for questions, I just wanted you to know that you're not the only one doing this with us. We are, in fact, the largest trust serving this purpose for public agencies in the state and in the country. We measure that 2 ways. One is by the assets under management, like I said, over $15 billion, but also in the amount of total employers we have participating. And you can see there's a lot of special districts like you. There's a lot of municipalities, there's counties, there's courts, there's schools. And what this means is that these diverse agencies with respect to revenue streams and economic volatility and economic capacity really support a robust machine that, despite volatility, whether it be investment, economic, or both, will probably continue to grow this trust fund for a very long time in the future. So the future for all the participating agencies and for us that work in it is really bright. We want to thank you for your participation in it because if it wasn't for your money, we don't exist and we're nothing without you. I wish CalPERS on a larger scale would remember that sometimes. I think they've gotten better at doing that in the last 10 years. And it's important that I say that out loud and let you know how I feel about it. Here's my name and number here. I've been working with you guys since you joined. I've been in this trust fund since its inception in 2007. It's my life at this point, and this has been just a blessing for me. What a wonderful career move I made, and I just feel so lucky to be working with you all. So at this point, I'd like to open it up to any questions that you have. I can go back to the share, but I'm going to stop sharing so I can see your faces. Does anybody have any questions for me?
Yes, Elizabeth?
Yeah, hi. Well, first of all, thank you so much for the report. Very interesting and very excited to see how well we're doing. I mean, both in terms of our return, but also in terms of our ability to get to 100% funded. And I just was curious, you know, you said we're about 86% now. So about how, yeah, of course, we never know what the market's going to do, but you know, what is your best guess on in terms of when we can get to 100%?
Sure. Well, let me go back to sharing my screen and show you how I would try to first answer that question. I think I'm probably going to jump to slide 8 and it might land on that. Now I have to go back a little further. There we go, slide 7. So I've been working here a long time, but I haven't mastered that move. Okay, so if I look at the growth rate each year, you went, roughly, 10 to 12 to, 16 percentage points. So let's be conservative and say that your average every 2 years, I should say, because you're measuring your liabilities every 2 years. Every 2 years, it's about 10% minimum over the last, 8 years. Then, you're within 2 to 3 budget cycles, assuming you continue to be able to fund it in the way that you have and that the liabilities don't change significantly for some reason, mainly because of a benefit promise change is why you would see that, either a reduction in benefit promise or an increase in benefit promise. Then I would expect within the next probably 3 to 5 at the most conservative projection budget cycles, you would be there, and probably more like 2 to 3. There is one big factor out there for me personally. It appears to me that equities are overvalued and that a correction could be on the horizon. And if that occurred, then what would happen is your liabilities would continue to do exactly what their pattern has been, but your assets would drop. So that would reduce the funded status. So that would be something that I would be, perhaps just aware of and paying attention to. Now, if that happened, you would just want to stay the course and continue to hold the amount of units that you held and wait for them to come back up in value, which they certainly would post correction. It would just take some time. Generally, I don't see more than 36 months of time before those unit values fully, build themselves back up to what they were and then some. That would just delay you getting there.
Thank you.
All right.
Okay, and any other questions? Anne?
Aren't we glad we did this? I
think
never
we are.
expected.
Yeah.
I never expected it to happen this quickly. So, thank you, Matt, and all involved. It's just a wonderful program and so reassuring for everybody who worked here. Good job.
Thank you, Director Wieskamp. The board has made it a priority to fund employee retirement, and that was a decision that was made a long time ago, and it does reflect the change in our long-term liabilities. But as Matt said many times, it is a volatile market, so we always keep an eye on it, and we're not exactly sure what the market will do in the future. But the board has definitely shown their commitment to funding these benefits.
I have a small question on the your page where you listed what other employers are participating in this. You had 319 special districts and other public agencies, and I think you listed special districts, but you didn't have parks. So are we the only park agency that is pursuing this course?
No, let me show you. There's actually a great tool that we have. It's on our web pages, and when you go to our web pages on the CalPERS website, you can view the CERBT participating agencies. And that's a templated slide, and we probably should have done better on that slide for you today. But nonetheless, what I could do is I could type in, park in this, oops, I have to type that correctly though. And then I see that there's 7. Now there's also community services district, which may have a similar functionality to a park and or recreation district. It just depends, but you would know better than me. That's your subject matter expertise, not mine. But here you can see that there's 7 total, including yours. So you're not alone.
No.
Okay, thank you very much for that.
Sure, you're welcome.
And I think we are doing very well, even with the possible volatility. It's just this, and then our trust fund for the employer, for the pension. I think it shows that we really want we want the money to be there when people retire. So, okay, thank you, Matt. And that was an informational item. So we don't need a motion, or we don't need to move this on to the board. So thanks again. And thank you, Deb, and everybody.
Yeah, thank you. Have a nice day. I'm going to take off now, if that's okay.
Well, all right.
Sure.
Thank you, Matt.
You're invited to stay if you'd like. Yeah.
I appreciate your time. Thanks.
Okay, thanks, Matt.
Thank you.
Bye.
Our third item is our mid-year budget report and proposed budget adjustments. Always an interesting discussion.
Thank you, Director Lane. And I think we're joined now by Dr. Ana Alvarez, our Deputy General Manager, and our General Manager, Sabrina Landreth, I think joined us. So good afternoon. I'm Deborah Auker, the Assistant General Manager of Finance and Management Services. And this item is part of our annual budget cycle that the district performs, the mid-year budget review. During this process, we accomplish at least 3 different things. Overall, check-in with all the divisions relating to their operating revenues and expenditures. We address important needs that are coming up since the adopted budget was put together in November of last year. And then we also get an opportunity to address certain long-term liabilities and needs, including, interests that have been discussed at prior board workshops. So some of the items that we've talked about today. In this mid-year process, it is built out by referring to some of the policies that have been adopted by the Board of Directors, including the General Fund Reserve Policy and our Balanced Budget Policy. And we're going to have Deborah Spalding and I are going to walk you through some of these proposed appropriations, and we're joined with many of the divisions that have been part of this. So I want to acknowledge all the work of the divisions throughout this process. It's definitely a joint process, and special thanks to the Deputy General Manager and the General Manager. And I think we named off some of the AGMs that are here to help me answer some questions. But unless there's any other comments by anyone, I will go ahead and turn it over to Deborah Spalding to get us started.
Hi, everyone. Can you see my screen?
Yes.
Great. All right. So I'm just going to, again, give you an overview of our mid-year budget process. As Deborah mentioned, we close our final year audit, which we just did a couple items ago, and then we calculate our fund balances. And our first priority is always to replenish our reserves. And so you'll see more about that in a couple slides from now. Any funds that we have that exceed our required reserves, we look to use those for one-time funding requests. We, by this time, have already had our board workshops, and midway through the year, we have a sense of, what are some emerging priorities and needs. And so we look at those, and then we ask the divisions to prepare their mid-year budget requests based on the priorities that have come out of the Board of Directors workshops and what the priorities are that are emerging that weren't known at the time of the budget adoption. And these are for the general manager's consideration. Before we get into what those recommendations are, I did want to give you an update on our revenue projections and our revenue to date. So here we are about halfway through the year. We have some good news. So originally we've gotten some indications from Alameda County that they are expecting a significant impact to commercial property tax revenue. And they were saying they thought that about 25% of commercial businesses had gone under and that they weren't going to be able to collect those taxes. And then just a few days ago, we got another update from them saying it's not going to be nearly as bad as they had originally projected. So we do think our property taxes are on track for the year. So that's the good news. And I also wanted to remind you that when we were developing our budget projections back in November of last year, we really were uncertain about how COVID was going to progress. And so these were the assumptions that we built into our budget. So we said we think that people are going to continue to use our parks more and more. So a 2% increase for day use fees, that's primarily parking. But we did implement a 50% reduction in revenue for things like camping and swimming, 100% reduction in event-based revenues and rentals, 100% reduction in attractions and concessions, and a 50% reduction in recreation programming. Now we are in June. We've actually do have some of our rentals and centers where we can host events like the Brazilian Room are operating. So this was, all in all, our budget was reduced by about 2.3 million from like a normal year. And I think we'll be on track. It's really early to be making that projection, but I just wanted to bring that to your attention that that was built into our budget projections for this year.
Okay, so what you're saying is that we were pretty conservative, and that's why we have this amount for mid-year, right?
Yeah, we were conservative in our assumptions for the this is just talking to you about what's going on in 2021 to date. Last year around this time, we actually came to you and said, hey, we have to reduce our revenue and expenditure budget because we're not bringing in the revenues from fees and concessions that we thought we would. This year, we actually built our budget projection to be more conservative based on these assumptions. So we think we're on track. It's a bit early, but I just wanted to bring it to your attention that we're not making any changes to our revenue budget right now. We think we're on track for the year and that we built these assumptions in. Does that answer your question?
So in terms of the amount that we have, before us, is this larger than last year?
Director Lane, it is larger than in the prior years. I think the closeout of the prior year is where we get this calculation. And so as we just adopted the audit and are bringing that forward, there is additional funding that's greater than our reserve policy. And in our reserve policy, we suggest that we utilize those funds to pay down our long-term liabilities and fund these other long-term needs of the district. So it's really based on the prior year's final results.
Yeah, Anne?
That's more curiosity than anything. Obviously, in the past, things like weddings were scheduled a year ahead. I assume nobody tried to do that last year. Are we now getting reservations for things like weddings, special events like that? Are we taking?
Yes, Director Wieskamp, when we put together the budget, we weren't sure if we were going to be able to open for events like that. We certainly have there's a lot of demand, and I think we are starting to, AGM O'Connor can correct me, but I think we are starting to do reservations for wedding type events. It's the larger events, like the big events that we were hosting at the Bridge Yard and other very large events that I think are still not able to occur yet and take a long time to plan. So we don't expect that those will be happening in this year. Is that correct, Jim?
Actually, Deborah, we are moving forward with events at Bridgyard and special events permits. So we are moving forward with those. So those are restarting, and we'll obviously see the revenue stream from those come in over the course of the year.
Great.
Good. That's great.
All right, so the last slide for me, and then I'm going to turn it back over to Deborah, is reviewing for you what were the priorities that we put forth to the divisions as they were putting together their requests. So we said the priorities were replenishment of depleted park district reserves, safe and healthy forest management and fire hazard reduction, reducing pension liabilities and stabilizing those future pension costs, funding for infrastructure renovation and replacement fund, environmental remediation and ecological restoration, repairs to damaged trails, parklands, and facilities, and mitigation/adaptations in preparation for a changing climate.
Thank you, Deb. Thank you. Now, there's a lot of information to cover, and we're very thankful that Director Lane did send us the items that she had either questions on or wanted further information. So please do interrupt us as we go through this presentation. We have lots of staff here to answer any questions. I'll go ahead and get started on the first part of the recommendations. The slides will cover the majority of the items, but there may be some other items on the detailed list that's included in your packet that are not listed on the slides. So here, the replenishment of reserves, as called out in the fund balance policy, is really helping us to manage these, big expenditures that we don't have control over sometimes. So we have a election cost contingency that we draw on every time we have an election. We set that at $2.2 million, and in our last election, we did draw down that contingency reserve, and so we'd like to replenish that as by about $181,000. Like I said, this is an area that's pretty hard to determine. We never know how much the cost of an election is. There's many variables. With our legal contingency also, sometimes these are costs that are out of our control, and we'd like to replenish our $1 million contingency back up for $168,000. And then we also have an operating budget in the general manager's department that we have set aside for costs that are unexpected as well in order to address certain needs. So again, the district's reserves, they provide a lot of different components of financial stability, including making sure that we have high bond ratings. So we are really sensitive to that because we issue so many capital bonds, and our reserve policy, our opinion on our audit that we heard about, and the funding of our long-term liabilities really does add up to us having strong AAA bond ratings, which helps the district in the future. Next slide. Another area of high priority for the district is wildfire hazard reduction and weed abatement. As you all know, we are fortunate to have FEMA grants to fund some of our areas in the Oakland Hills for fuels management and vegetation management. You've heard a lot about the tree mortality situation in our parks, and so we feel that there's additional funding necessary. So we're recommending that we put an additional $1 million into our budgeted program that can be utilized outside of the FEMA area or inside of the FEMA area. It's more discretionary, and that will help us with all those issues that are going on. We're also requesting from the state an additional $3.5 million for wildfire hazard reduction, and we're seeking grants all the time in this area. Also included in this request is the funding for the biological monitoring that's required and cultural resources monitoring that's required for doing this work. So there's an additional $400,000 in that area. And then in Measure CC, as you can recall, we have a large amount of Measure CC and Measure FF that is allocated for fuels management. As we're closing out Measure CC programs and showing that we've completed the projects and there's funding remaining on those, we are recommending that we put that money towards fuels management in the Measure CC area. So we'd like to appropriate another 855 from the remaining balances from Measure CC into fuels management projects. In addition to those types of initial entry and large contracts that we issue, we have our regular operations cycle during the year that requires weed abatement for managing fuels. And the district has done a lot of analysis and determined that acquiring additional equipment is necessary because the period of time that we used to have to do this management has now shrunk, and it's required much earlier in the year. And so we have just a very short timeline to get all of this work done. And so we're proposing to purchase additional equipment in that area. And I'm not sure if there's any questions on this. I know AGM O'Connor is happy to answer any of those. Next slide.
Jim, you want to talk a little bit more about it? Seems like a lot of equipment.
You're right, Director Lane. One of the things that we have to keep in mind is not only has the fire season changed significantly, we have been challenged with meeting our weed abatement deadlines that are set by each of the fire districts that we work within. That's been an increasing challenge. So in the past, we used to share a lot of equipment across units and sometimes across the district. That's really not an option anymore because all of this work has to be done roughly at the same time in all of our park units, a little bit earlier in East County and a little bit later in the west side, of course. But that is completely inefficient to share equipment. We really cannot get this work done by sharing equipment. So we've got that challenge going on. Plus, obviously, we're still adapting to the loss of glyphosate as a tool in our toolbox. And so we've got a lot of things happening here that are just the perfect storm where we need to have this equipment if we're going to meet our deadlines and provide for that weed abatement work, which is, of course, critical to fire prevention in our parks.
So do we do very many fuel breaks, actual fuel breaks?
So I won't speak to the fire department's work. They primarily focus on fuel breaks and fuel reduction from a wildland fire standpoint. The work that our staff does, we do some fuel break work, but a lot of our work we do is in our developed areas around ignition sources, the idea of ignition sources and preventing ignition from within campgrounds, within picnic areas and other things like that. But we do fuel breaks and fuel reduction along park boundaries in some locations or around our developed areas.
Okay, thank you. Any other questions from the board? I do want to say I appreciate getting the larger pages with the larger print because I just appreciate it.
Yes, we thought you would. Thank you. All right, next slide. Another area that we are focusing on is environmental remediation and pollution remediation in some of our parks. We've been talking about the closure of the Chabot Gun Club, and we've been working with an environmental firm to come up with the plan of how to remediate that area. The newest report we received does increase the amount of liability and cost that it will take to 10 to 15 million. So we have, as a practice, been putting money aside each time we have these available funds to fund these programs and this remediation. And so here we're recommending an additional $500,000 towards the gun club cleanup. The Burrell agricultural site, we've also been doing some analysis there and have recently found that there's a cleanup needed for an old storage tank, and Matt Growell is on the line to answer any questions about this, but we are recommending $300,000 for what we know is necessary out there now. It could be more once we get into the dirt. And then also we're continuing to do our analysis at Point Isabel, and we expect that that'll cost an estimated $4 million. And we have been putting a little bit of money aside for that, but in this budget, we're recommending $200,000 to go towards that $4 million liability. So
my question was how you, well, not for the Burrell one, because this is the total amount right now, but how do you make the decision of, on something like the gun club or Point Isabel as to what you will propose to defray the ultimate large cost? So how does that decision making go?
That's a great question, Director Lane. I think we certainly want to keep ahead of the amount of work we know that we can do on an annual basis. But also, like I mentioned, we see these long-term liabilities and needs out there. And so we do just try to put, when available funds are there, we try to look at all of our priorities and put a little bit in each of those areas. And Carol Victor came on. I don't know if Carol, you'd like to add to that.
Good afternoon, Director Lane and members of the committee. We are working with environmental consultants who are helping us do an assessment at the Chabot Gun Club, and with the ultimate goal of developing a remediation plan. But we had some revised estimates between estimating that it will be between $11 and $15 million. So that, knowing that we're going to be looking at a significant cleanup, probably starting in, I would say the earliest it's going to start would be in 2 years. Probably 3 to 5 years is more reasonable. So we're just trying to make it so we don't, so those funds are there when we need them to fund this remediation.
Okay, so it's not necessarily what we're spending this year, but sometimes.
Yes, but we are spending money on our consultants, and I don't have those exact figures, but that's something we can provide a report to the board on.
Okay, and I think Elizabeth, you had a question?
Yeah, I did. So on Point Isabel, I know that we certainly have taken the position that the state is ultimately responsible. So I assume we're trying to get that $4 million from the state.
So, Director Eccles, yes, we're in conversations with the state, and we've been talking to them a lot lately. Just so you know, the state doesn't agree that it's 100% their liability, but yeah, but we so we are treating it as a hopefully a friendly dispute with one of our longtime partners, and I expect that at some point the state will be contributing, and we're still working on that.
Right. Okay. And in the meantime, Deborah, the amount that you were planning to put for this year, can you give me that number again?
Sure. We're recommending $200,000 for this year.
100,000. And would that be going to consultants or to start the work, or what would that money be used for?
Some of it would go to, we have a consultant, and the board, I believe, already budgeted the funds. So we have a consultant who is preparing a design for us, and that's where we've gotten the $4 million estimate. And so it will go to those costs, and it would also, if we move forward with the fix, and it gets, which we're working with the resource agencies and again the state parks on the fix, then those costs would also go to that, or those funds would also go to that.
Thank you.
Okay.
I think Director Wieskamp has a question.
I'd like to know what we're doing each year to make sure that the site is stable, that nothing is changing. If somebody could tell me that.
Which site, Director Wieskamp?
Well, I'm thinking about Chabot Gun Club.
So Matt can, we're monitoring it closely, but Matt Grell can tell you exactly what we're doing. And the site has been fenced. There's no other activity occurring there, and we're managing the stormwater.
Okay. Hasn't done much for that.
Yeah.
Yeah, and it's been easier to monitor this or manage the stormwater now that it's not an active site. So we did make some modifications after the range closed, so we could pond water on the ranges, so it doesn't discharge from the site. So we've significantly eliminated the discharge, or we significantly reduced the amount of water that discharges from the site. And then we have a contract, and we update all the stormwater erosion controls and BMP practices as rain events happen and things. So it's actively monitored.
Okay, good. Thank you.
Okay, thank you.
Thank you, everyone. All right. We're moving on to drought response. The news is definitely showing that we are in a drought and that it's expected to worsen. And so the district is preparing for that. We do have a few projects that are planned for this year. And I think the Miller-Knox project is underway or just recently being completed. Also, we've identified the Martinez Shoreline Turf Rehabilitation Project. Really, I think a lot of it has to do with irrigation systems and updating those. But really, throughout the Park District, there's a great need to look at a lot of our developed areas. And so we are recommending about $2 million to set aside for these types of projects. As we can get to them, the sooner the better. We're proposing that in our budget. And then also water infrastructure for livestock. It's actually in your hard copy in a different section, just under department requests, but as we looked at it, it truly is related to drought response as well, where the cattle, you know, in order to graze effectively, they need water, and they need water in certain locations. So making sure that we're addressing those water infrastructure needs for livestock is also included here. There's about $800,000 recommended for that area. So any questions on this? Right.
I guess I'm wondering about how we are evaluating when we keep grass and when we don't. So for homeowners, they're encouraged actually to get rid of the lawns, but we're a park. And so lawn opportunities are something that we offer. So are we looking at, you know, as we're doing turf, how do we go about evaluating whether we need to keep the turf in this park at the size that it is or not?
Yes, thank you, Director Lane. Deputy General Manager, Dr. Ana Alvarez. And I'm going to take the lead in answering your question. We've had many conversations with operations, the operations division, who have amazing technical expertise and have done very good work in the past in being able to balance the recreational need that you're describing along with the demand to conserve water. So in our developed park areas, we do have some long areas that are primarily utilized for passive recreation. This is where we see large gatherings by families and individuals that may not have a backyard or may not have the space to conduct a general picnic area and that passive recreation. So we have a responsibility to be able to continue to extend that passive recreational opportunity, and also to maintain the physical asset. There's an investment of public funds in the installation of turf and the maintenance of turf, which is not inexpensive. So, and we can maintain that physical asset by managing the water. And so the best solution for the Park District is precisely to have very specific controls tied to weather control systems that prevent that give us the opportunity to manage the water really, really well. It is not our intention at this moment to start eliminating or assessing the value of lawn areas in the district. Our goal at this moment, at this stage of the drought, is to sustain all of our lawn areas. Because, as I mentioned, it is a critical part of the infrastructure for park, for recreation, passive recreation. Perhaps I would say perhaps 2 years from now, we can begin having a conversation. But again, it is not, that's an extreme response to the drought. Our intent is to sustain our lawns and to maintain that turf area. And we can do that not only by water, I just want to mention also by the replacement of the type of grass in those turf areas. So it's about utilizing drought tolerant grasses, which the district, again, operations, and kudos to Jim O'Connor and Steve Castillo, because we have over the last four or 5 years slowly been replacing turf with drought tolerant turf, which is going to be a big piece of our success. I hope this answers the question.
Yeah, very helpful. Thank you.
You're welcome.
Next slide. Oh, we have a question from Director Wieskamp.
Yeah, I know at Shadow Cliffs we have the benefit of using recycled water. Are we looking for opportunities in other communities where that's a possibility?
We couldn't hear you. Can you say that again?
I think AGM O'Connor can answer that question about recycled water availability.
So Director Wieskamp, you're correct. We do have recycled water, reclaimed water available at Shadow Cliffs. The challenge is in the legal structure around the use of that water, especially around picnic areas, anywhere there's food used. So we are using that water for trees and for the rainwater retention systems that we put in when we installed the solar system. So we are trying to utilize that water to the greatest extent possible. That system is also shared with the city of Pleasanton and the county of Alameda for their work along Stanley Boulevard. So in other areas, the challenge is getting that purple pipe close to us. Right. So we always look for those opportunities when there's a major infrastructure upgrade that includes purple pipes. We'll always look for that opportunity when we can to connect our parks to those systems for irrigation practices that are applicable. Things like turf that may not have picnic areas nearby or campsites nearby. We'll try and use that as much as we can. So that's definitely part of our long-term strategy.
Right. Thank you.
Okay, our next slide here is really just grouping things together that are safety related. I've shared with the board in the past that we were very diligent at coding all of our COVID related expenditures, and we are not being as successful as we had hoped with getting reimbursement from FEMA, although we continue to work with them. There are certain charges that they're deeming to be ineligible for reimbursement, and we're continuing to work with the legislator to seek additional funding, but we've identified just under $1 million that they've deemed ineligible as of now. Also related to drought and all the other conditions, the trees are more stressed. We do have a hazardous tree removal program, which is very active, but we're seeing that there are more trees under stress. These are mostly in the closer to the developed areas in the parks. So we'd like to provide additional funding for that program. And then wildfire smoke response is something that we brought to the board as part of the annual budget to do an assessment. And actually we just hired a engineering firm to continue the assessment of our facilities. So we're looking at our district facilities and trying to determine what kind of improvements are necessary to provide for wildfire smoke events if the AQI is over 150. And so we're engaging a consultant. We've had Mass do evaluations of all of our facilities, and now we just need some capital money to go ahead and make improvements as quickly as we possibly can. Also, as part of our performance goals, we are planning to put a generator at Trudeau Center. We've done some design work and now are requesting additional funds in order to get that installed. On the risk management safety program side, we have Last Finance Committee, we brought to you the insurance program where we did share with you that the premiums were increasing, a lot of them related to the property side of our insurance program. So we're proposing a $393,000 increase in our insurance premiums based on that report. And then also in the risk department, we have prioritized a lot of the safety work, policies and procedures, really working closely with staff to put into place more procedures, and there could likely be some equipment or supplies necessary, and then also updating certain generators throughout the district that are necessary for this power shutoff that happens from time to time right now. So those are grouped under safety. In your document, there are some additional public safety items. If you have any questions on those, we're happy to answer those as well. Okay, next slide. And then there's some capital related items and long-term liability related items that are also out there. Some of them have been discussed at previous board workshops, and our aquatic facilities have come up in many occasions. So we're recommending that we put $2 million aside. We have, we still have needs at Contra Loma Lagoon. We have Cole Canyon and Don Castro are some of our aquatic facilities that definitely are in need of some, assessment and improvements. The next item is the Coyote Hills Dunbarton Quarry Service Yard. So included in our budget, we have about $3 million available, and the design and construction team has finished their design and their estimate. And we expect that we need an additional $1 million in order to actually build the service yard. So we're requesting that as part of this mid-year review.
So does that mean we'll be able to complete the service yard?
With this additional funding, we expect that is enough to complete the service yard, yes. Yes. I think Ren is here. I don't know if he has anything to add to that, but.
Good afternoon, Ren Bates. No, yes, we anticipate that will build us the service yard.
Great. Thank you, Ren. And then also a few other items related to the Habitat Conservancy plans out at Deer Valley and Roddy Ranch. Additional funding is necessary there. Also, as part of our performance goals and our demographic data collection, we identified that the district probably could use some help in managing and developing programs for tracking that data in recreation and interpretation programs. So we're looking for additional services in that area. Grant writing services, we have been utilizing some outside grant writers for some of these very large grant programs like Prop 68 and the RAISE grant. And so we are requesting additional funding in that area. And then this item here, I know Director Lane was interested in improving cultural resources data management. And I was talking to our Chief of Planning, Brian Holt, and he said this is for a new program, a 3-year subscription for data sharing with the Northwest Information Center, which is part of Sonoma State University. So that would be data sharing in a way that we haven't in the past, where we receive data from other agencies and we share our data with them. And then in the other funding category, these are more capital related. We do have a commitment to work on the trail for the Orwood Bridge, which I think another agency is really developing the pedestrian and bike pathway over the bridge, and we just have to do some of the ramp up and the ramp down. I'm sure I'm not saying that correct on that project. And so we're estimating that would be $500,000 of measured WW funding, and design for the Llama Lane Trail, which we would be using non-general funds for that. So we'll go to the next slide.
Is anyone talking about Point Pinole Service Yard? Does that come up and then it just doesn't make the cut, or what?
Director Lane, I believe that's next in line, but I'm going to let Ren Bates respond to that.
Yes, that's correct. Ren Bates, Capital Program Manager. Director Lane, in response to your question, we are working on that. So just a little bit of background. The district has long endeavored to have a standard service yard so that we can sort of build the same facility throughout and incur economies of scale, or just knowing how to build the same project. So with that in mind, we have plans for Dunbar and Quarry Service Yard, and so in terms of capacity, we want to build 2 service yards. We're going to use the same design. We'd like to learn from one first. That also allows our architect, Jim Devlin, who's managing the Dunbar and Quarry Service Yard, work on other projects such as the Belleville Visitor Center and things like that. So we didn't want to overwhelm him, but we also wanted to learn from the Dunbar and Quarry project in terms of how we can move forward with the same design at Point Pinole. So it will be the next in line. We want to get them both done. We know there's a significant need, but we wanted to take the opportunity to learn from these 2 projects as moving forward for a district standard for a service yard. That makes it, so I'm happy to answer more questions, but that is the strategy at this point.
Thank you. You know I'm pursuing it.
We are as well. It has not fallen off anybody's radar.
Okay.
Ren, yeah, if I may just add, thank you for that. I'm happy to hear the update, and I'm curious though, what that would mean in terms of timeline. Certainly, it makes sense to do one, learn from it, and then do the next one. But what are we looking for in terms of actually getting something out there at Point Pinole?
So what we are hoping to do is that we will begin construction on the Dunbar Quarry Service Yard soon. We're awaiting final permitting from the city to move ahead and put out those plans for bidding. And my anticipation would be that as we get into that construction, we can then start to finalize plans for Point Pinole. And I anticipate maybe going out to bid probably about a year from now, hopefully.
Okay, thank you.
And the Point Pinole visitors, the Point Pinole service yard has a similar budget to what Coyote Hills started with, about 3.3 million. So based on how this one is developed, we may need additional funds for that one too, but we do have a pretty significant budget started for that project. Okay, next slide. So then these are other requests that are high priority that came through the divisions, and natural infrastructure being a topic that we've brought up before. This is really addressing lakes, ponds, streams, the dredging and erosion that is occurring, and putting $800,000 aside to start to have a funding source for those projects. We know that the cost is great in the areas of, discussing Lake Temescal and analyzing what's best for Jewel Lake. The next item is, I guess, kind of an exciting item. The California Conservation Corps is looking to partner with us to do work in our parks, and we're working with them to kind of redevelop the Holly Court buildings and put some improvements into that. We've already done a pretty thorough analysis and been meeting with them. And so far we've committed to $300,000 from our funding. I think the project is pretty significant. I want to say it's going to take a couple $1 million to really put those improvements into place. A lot of them have to do with health and safety, ADA improvements to those facilities. But that will get us started and keep us negotiating with them to get funding from the state for that. Our website, I think the board is aware, we approved a contract with a new provider. Our current provider, Granicus, gave us very short notice that they were no longer going to be servicing agencies like ours. And so after the budget was adopted, we were notified that we're going to have to quickly get a new provider, and we're going to be redesigning our website and going forward with that. So this is a request from Public Affairs. Related to fuels management, this is the item I mentioned before. Additional work on kind of monitoring and reviewing for cultural resources as we begin initial entry into new areas for fuels management. We haven't been doing a lot of work in that area, and so we'd like to set money aside so that we have funding available for that, that need. And in operations, upgrading a pumper truck in the sanitation department. And then also the INR department has been working on this really fancy augmented reality application where people can go onto our website or use a certain device and see our parks. And I think some of you have had an opportunity to see that. We've been doing it, and the funding has come from the Regional Park Foundation, and now it's our turn to kind of continue that practice now that the pilot has been successful. So requesting funding for that. Next slide. And then also we have our major infrastructure renovation and replacement fund that also has a funding policy where we are really tasked with putting aside, you know, $10 million per year into this program to really get our facilities up to our target facilities index, our facility condition index numbers. And we've been making great progress. As part of the annual budget, we do set money aside, and then regularly as part of mid-year, we put additional funds into this program. So we're recommending that $3 million from the general fund go into this program. And then appropriations out of these funds and the MER funds is what we call them, or Fund 553, you might have heard us refer to. We have infrastructure on our current facilities that we're proposing continuing work on. So for the merry-go-round, we have done an assessment of the structure, the foundation, and the roof, and we're finding that it's a pretty big project, and we'd like an additional $750,000 towards doing the work for that to protect that very important asset. We've done an analysis on the solar panels at this administration building, and we're finding that they are at the end of their useful life, and so we plan to replace those solar panels to keep this building under that being managed by solar. And then also part of our district-wide program for infrastructure, we put forth a plan to really start with looking at roofs and electrical systems, kind of targeting one park at a time. And we'd like to target Redwood Park, the roofs at Redwood Park, to really contain and protect the facility below. So setting aside $300,000 for work that's going to be contracted out with the MAST team for that. Also, as we're preparing and planning for the tenant improvements at Peralta Oaks North and relocating our public safety headquarters to that location, we want to be prepared to reuse and repurpose the current public safety buildings at Lake Chabot. And so starting to analyze those needs. There's certainly needs that we're working on currently to keep that building in good shape. So these funds could be for repurposing in the long term and providing funding for the current needs that are kind of regularly going on out at that facility. And then there are some other smaller projects listed in the report that make up about $300,000. And I can answer any questions related to those if anyone has any. Yeah.
I have just a general question, and that is, you look at these and when you have discussions about what will be included in the budget, how does the conversation go? It's like, this doesn't quite make the priority for the budget, and then the conversation goes like, well, maybe it will make mid-year, because so many of these are addressed in the budget, and then there's not enough funding in the budget.
So thank you for that question, Director Lane. As part of the annual operating budget, we do have a practice of really focusing on the operating side, and our capital projects and our other infrastructure projects sometimes come to the board as we are ready for them, as we put together our funding strategy, as we have, you know, completed design work and are ready for the next step. That's kind of been the practice. So some of these types of projects are not included in the annual budget as a practice. I think we are working towards getting more projects into the annual budget process. I know Lisa Gorgian, our Chief of Design and Construction, has now that she's been here a few years, has the opportunity to put together more of a long-term plan of the different projects that are coming up. But from time to time, we do have things that arise that are outside of that long-term planning scope that we want to address. So I don't know if that answers your question.
I had a related question. I was just curious. So do we already have 10 million in the MER fund for 2021? And so this would make it 13 million, or does this help to bring us to 10 million?
Well, the recommendation is actually to put 10 million annually into the program and spend that much.
Right.
We've kind of targeted 5 million annually to put into the program, trying to keep up with that. But in order to actually increase our facility contingent index, the program recommends more, and it recommends a target fund balance of 10% of our current value of assets, which is just over 40 million. And I'm hoping that maybe Deb or Michelle are looking at the financial statements for me right now to tell me the fund balance that's currently in there. I think it was around 13 million. But our target fund balance is, I believe, closer to 40 million, and we have 17 million in there right now. So we do replace buildings and do these big projects. You know, we can spend that money fairly quickly, as you've seen when we come forward with things like the Contra Loma Lagoon and other big projects.
All right, Deborah, I can take this one. It's, Michelle's not ready. We had about 13.2 million in fund balance. That was what we were estimating to begin the year with.
Thank you, Deb. Okay. And I think as part of our board workshops, when we do the maintenance section in our board workshop number 3, we have tried to put forward, these are the projects that are coming. These are the projects that are planned, and as we get estimates, then we bring it forward to the board for funding. Okay, I think the next slide is the last slide for the list. And these are other appropriations that are not general fund related, things that have come up during the year. So Measure FF, we did put forth a funding program in the annual budget, and we actually kind of forgot about the zoo when we put forward the budget. So every year in Measure CC and our commitment as part of Measure FF continues to provide funding for enhanced conservation for the Oakland Zoo. So budgeting and appropriating that. And then in Measure CC, as I mentioned before, we're closing out different programs. And some of these we're asking for new appropriations because these are areas where we never really put forth the full amount of Measure CC that was available. We were waiting for the project to get a little further on. A great example of that is Miller Knox. And so our project, we've had a project out there, which is taking out the, enhancing the bay trail there and the shoreline trail by removing the railroad and cleaning up that shoreline. And so Measure CC has this funding available to it. We were waiting until we were ready to go forward with that project and move that forward. There's some additional funding available at MLK for Tidewater, monitoring for the Dotson Marsh. I'm sorry, that's spelled incorrectly. And then just finalizing, it says build Golden Gate Trail, but it's actually the monitoring for Albany Beach that I believe that this 29,000 will go towards. So that's a former project name. So that's the Measure CC kind of finishing out that program. And when we came to the board workshop, we did mention that we were going to request these items at mid-year once we had, closed out the audit of last year for these items. Similarly with the lighting and landscaping districts, as we finish out the previous year, we find out how much fund balance is available, and those funds for lighting and landscaping districts and zones of benefit do provide for staffing, but also the accumulated fund balances we have been using for either projects that are listed in the goals of those zones or for equipment. So we're recommending some additional equipment for those areas to manage and maintain those zones of benefits. And
Can
then,
I ask about the Garin? Where is the Canyon Rim Trail? Is that the
Director Lane, that's in Garin at the Walpert Ridge. And I guess there's about 7 miles of trail there that we managed, that we took, that was dedicated to us. And so this is for the, what do we call it? The grading of that trail. Also, I think part of the project includes maybe putting in a restroom. And I made a note of what else. Putting in a restroom and some water meters.
Yeah, is that an improvement of a trail, or is that the name of the trail that goes from Garin down over the railroad track?
Let's see, the name is the Canyon Rim Trail, and
I don't recognize where that is.
Yeah, it's up at Walpert Ridge in Hayward, I believe. I can get you more information on that. Am I right, Jim? Did I get that right?
Yeah, Director Lane, I'm also stumped by that, but we can certainly follow up and get you some information.
Okay.
Trail.
Thank you. I will get you more information on that. And then the last item is just our bond funds are managed with PFM, and they have to be in trust accounts. And so there are different banking fees, and we didn't put that forward in the annual budget. So we're requesting to put some money aside for that to cover our banking fees over the next couple of years for Measure WW bond funds. And I believe that is the last slide. So we're happy to take more questions. As I mentioned, there's a few other items here that I did not put on the slides. If any board members have any questions on any of those details, we're happy to answer them.
Okay, any questions? Board members further on this, it's quite a list. I will say. I was wondering about the various cultural resources ones under division requests, and are those all related to working with Sonoma State, or are they all different? The data management.
So the data management, Director Lane, is the subscription program for data sharing that I spoke about with Sonoma State.
Okay.
That's that one. And then the other one I spoke of is it's really the fuels management initial entry, and us providing for monitoring related to cultural resources for that work.
Yes, and then further down, number 24, you had cultural resources task, routine maintenance.
Yes. I have to look that one up, so I might have to get back to you unless Matt Grau knows the TCP cultural resources related to routine maintenance. I think Matt can help us with that.
Yeah, this is just to do more monitoring of sites and investigation before and during our routine maintenance activities when we encounter areas of potential cultural concern.
Okay. All right, so Elizabeth, and Ann, do you have any other questions or?
Quite an intricate list.
Elizabeth, anything?
No, not really. I've asked my question.
Okay. Well, thank you. I do feel like these recommendations do follow the policy, the policy we have and the practices that we have, and they are providing funding for these long-term needs and long-term liabilities of the district. So I think that's our recommendation today.
So you're recommending?
We are.
You would like us to recommend?
We would like the Finance Committee to recommend approval to the full board.
Yes.
Okay, so yes, Ann?
Yeah, so moved.
Second.
Right, would you like to do a roll call for us, Kate?
Happy to, just taking down some notes. So that was Director Wieskamp motioned and then seconded by Director Eccles. Thank you. So first I would like to start with Director Wieskamp.
Aye.
Thank you. And Director Eccles.
Aye.
Thank you again. And finally, Chair Lane.
Aye.
Oh, thank you.
Ladies, we just spent a lot of money, or recommended.
Didn't we though? Yeah.
Didn't we? It was quite a spree.
Yeah.
Director.
So you had Christina Crosby, who took the lead in this?
Christina Crosby, our budget manager, is definitely behind the scenes making sure that we are adding up all these numbers correctly. And so we're
not going in
to
depth.
Christina. Correct. And truly this, I know this is a big appropriation request, but it is just scratching the surface of many of the needs of the district. So thank you.
I can see a few things that didn't appear here, as I think all of us can. So, thank you for your work on it, Christine.
Thank you.
And so there was a motion and a second, and you took the roll call, so we are recommending.
So I think we are completed with the mid-year item, and we're ready for the next item if you are.
You even got it on film.
All right, and so item 4, we have we're going to take a look at our budget calendar. And where are we on our budget?
So I'm going to introduce Christina. She's going to go ahead and walk us through this item.
Okay.
But for some reason, we can't hear you, Christina.
But other than that,
I know.
Minor problem.
Yeah.
So under your setting, you use the caret for the mute button. You might be able to click a few of those. But while you're working on that, Christina, if you wouldn't mind, I might have Deb. Do you think it worked?
I don't know. Can you hear me?
Yes.
Okay.
There you go. There you go. All right, Christina, go right ahead. Thank you.
Okay. Sorry about that. At least we figured it out quickly. So good afternoon. I'm Christina Crosby, Budget Manager for the Park District, and I'm here to present this informational item outlining the budget calendar for 2022. As you know, the Park District operates on a calendar year with the budget being adopted in December and effective from January 1st through December 31st. But there's quite a bit of work that goes into the budgeting process throughout the year, and this calendar highlights some milestones and due dates for staff. Next slide, please. Deb, can you get there we go. In June, as we just saw, the mid-year was presented to the Finance Committee, and I am concurrently working to verify the position budget that we will use for the preliminary budget. This includes cross-referencing positions with HR, the finance system, and the current adopted budget to create the template for 2022. In July, the mid-year budget will go before the board for approval, and the departments will begin reviewing their 2021 performance measures. In August,
I have a question before you go on. So when you were talking about position verification, so does that mean that people who want to add additional FTEs to their division or department are expected to have a job description completed for that, or is it's at that point we just have the concept?
So initially in this process right now, what I'm looking at in June is just making sure I have all the bodies that are already authorized by the board with their titles and classifications counted for. So I'm looking at the CalPERS rates going up, insurance, and I'm counting all that. So we're just starting with our base in June, and that's our preliminary.
Okay.
If there are changes to the classifications or upgrades or changes to the positions, then there's a process they go through, and they should be starting that now, hopefully, and then that will get introduced later in the process.
Okay, so the reason I'm asking that is I just want to be sure that we are folding the needs of HR in.
Yeah.
Yes.
So that they, in a timely way, are able to address the specifics of each position. Thank you.
Absolutely. Okay, so in August is when we really get started with the divisions. We develop the preliminary base budget and the parameters for the available funding. We start with 2 weeks of budget workshops for staff so that they can complete their base budget changes and enter their budget requests for 2022. We also receive estimates from the counties for their property tax assessed value, which then allows us to complete the forecasting for 2022 revenue. Next slide. This brings us to September, October, and November. In September, finance and the general manager review budget requests, performance measures, and consider the needs of the park district and the board priorities. Executive staff reviews the proposed 2022 budget requests that are then to be presented to the board. And in October, we take those decisions and incorporate the budget requests into the proposed budget and bring it to the finance committee for a preview of the general fund proposed budget. Then in November, budget presentations are held for field and administrative office staff. The GAN limit is calculated and it is made available for review. In both the Park Advisory Committee and Board Finance Committee receive and review the 2022 proposed budget document. And then we get finally to December, which is next slide, thank you. The first and second public hearings are held for adoption for the 2022 operating budget, project and program budget, and the formal approval of the GAN limit. Staff provide the final status of their 2021 performance and are incorporated into the document. We print out, distribute hard copies, and post the final adopted budget on the Park District website. And that completes the process for 2022. And then we start all over again for 2023. So if there's any other questions, I'd be more than happy to address them.
Okay, are there any questions on the calendar for her?
Well, Director Lane, I will just mention that this has been our practice with the Park District, and we're very excited to work with our new general manager, Sabrina Landreth, to introduce any new steps or change in procedure as we work forward with this this budget year. So we're excited to work with her with a new view of operating budgets.
All right, so Sabrina, are you there? Here you are.
I am.
So I assume that you have looked this over, and this is our regular way of doing things. Are you thinking currently that that's fine, or do you have some thoughts on ways we might improve it?
At this point, no. This is my first time going through this, and I told Deborah I'm just kind of listening and getting feedback from staff on how it's working and not working, and that we would think about this kind of going into the fall for whether or not we wanted to make some changes. So no, at this point, I don't have anything specific.
Yeah, so I know that people come in with more desires than our budget will provide. And I want to congratulate people in finance for keeping everyone calm as they compete. Because I think we know there are many needs that we have, and we can't say yes to them every year. I know for me in the budget, I get that draft budget and I go straight to the list of FTEs. That's like, look at a couple pages and then see the FTEs. And because I know there are needs throughout the district. So thank you for the calendar, and I know you're going to have your usual challenges.
Thank you.
Thank you, Sabrina. Okay, are there any other, Elizabeth or Ann, do you have anything?
No, I think it's established, and I think it's wise on Sabrina's part to watch it, see what happens.
Lucky person. Okay, and we are fortunate that some of the dire things that we heard about happening for this year weren't as dire. So it actually ended up to be a different resources. So we're through that stressful 2020 year, and I hope doing things a little more normal this year. Certainly hope.
Yes.
Okay, so are there any other comments? Thank you, Christina. Appreciate you going over that for us. All right, and then we are now at public comments. Do we have anybody who would like to talk about these important issues? Caitlin?
We do not have. I'm sorry, I didn't mean to interrupt you,
No.
Charlene. We do not have any public comments, and I did double check my email. I knew you were going to ask that question, so we do not have any public comments.
Okay, thank you. And next we have committee comments. Any comments from the committee, Ann?
Isn't it amazing we get no audience here when we're talking about all this money and what we're going to do with it? It's fascinating. I would like to request the information of what's happening at Dumbarton with the tipping fees coming in for dirt being added. I haven't heard or asked that question lately. And so I would, somebody can later give me the information. I don't need it now. But other than that, it's been great to attend a finance meeting. So thanks for the opportunity.
Okay. Do you have anything, Elizabeth, you'd like to add, or I can't hear you? You're on mute. Yeah.
How frustrating.
I'm not doing it. Sometimes we try to help the directors and we click mute at the same time you're clicking mute. I think I can try to unmute you if you'd like and see if that helps. If I ask to unmute.
Oh.
Does that help?
There it is.
Can you hear me now?
Yes.
Oh, okay. How weird. Yeah, it wouldn't let me unmute either the normal way or by tapping the space bar. But anyway, after all that, I didn't really have anything further to add. Just want to thank everybody for their reports and for your own ongoing work and attention to these issues.
I'd certainly agree with that. So thank you very much. And we have another Finance Committee meeting in July.
Correct.
July 30th. And we'll see you all there.
Thank you so much.
We'll see if you see me or not. I'll be available.
Or not.
Or not.
Thank you. We stand adjourned.
Thank you.
Have a good weekend,
Thank you, everyone.
Thank you, Deborah.
Yeah, have a good
Thank you
weekend.
all.
TGIF.